Two of Australia's biggest lenders downgrade their outlook for house prices as auction rates soften. A major overhaul for universities to help out poorer students. And Warren Buffett warns that the very good times might be over. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Monday, the 26th of February 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. Good weekend?
Yeah, it was. It was a busy weekend. It was one of those weekends where you get to the end of the weekend and you're like, I could do with another one, actually.
Yeah, I know what you mean. It's funny. I had a funny night at home last night because there's a bunch of, 25 to 30-year-old boys, 14 of them out the back, doing their football draft. And it's that time of year where 20-something-year-old boys just seem to sit there and they were focused. They all had laptops. They were picking the players they wanted, all beyond me. But quite interesting to watch, to be honest.
Oh, it gets very, very serious, doesn't it? That's quite intense.
Very serious, yeah.
Goodness me.
Incredible.
Sean, another person, he's not so serious, but I mean, he's a very, very good communicator. Ben Gilbert, your interview guest today. You're speaking to Ben from Jarden, Australia. It's all about reporting season.
It is all about reporting season and particularly consumer-facing stocks, which means you end up talking a lot about travel companies and retailers and people like that. We ask him how they've gone and what they're talking about in terms of the future, share price growth. He even gives us a hint about, no, not a hint, that's not the right word. He gives us a tip about a couple of stocks that he thinks might do okay this year.
Yeah, it's a really good conversation. I love it as well because these are all household names that he's talking about. So it's just a really interesting conversation for investors or non-investors, just anyone interested in that space. It is worth a listen. It's coming up after the show. The main story, though, this morning, Sean, two of Australia's biggest lenders have downgraded their outlook for house prices this year, just as auction clearance rates stumble, albeit from a high level, though.
Both National Australia Bank and ANZ have downgraded their house price forecasts in recent days. For Sydney, both banks expect the increase throughout 2024 to be between 4 and 5%, and for Melbourne between 2 and 3%. Now, that's lower than where they had previously forecast, and it's after watching what's happened so far this year. The cities where prices are expected to grow most are Perth, Brisbane and Adelaide. In Perth, both banks are forecasting 10% or more growth, while Brisbane will be not far off that. The worst performer, at least the forecast worst performer, is Hobart, which will be lucky to scratch out any price growth whatsoever. Later this week, we'll get the February house price figures. It just seems that the increases have just come off the boil, particularly in Sydney and Melbourne, Michael.
Okay, so tell me about the auction clearance rates over the weekend.
Well, it's still pretty strong. The weekend preliminary clearance rate across the country came in at 73.5%, down from the peak of 76.2% a fortnight ago, but still pretty good. After holding above 80% over the past couple of weeks, Sydney's preliminary clearance rate slipped a little to 77% across 981 auctions. According to CoreLogic, Melbourne's rate also came down a bit to 70.6%, the lowest so far this year for that city. Still well above levels recorded late last year, though. The past 3 weeks has seen the preliminary auction clearance rate rise an average of 6.1 percentage points lower on final results. What's that mean? It means when we're talking about a rate of 73.5% as the preliminary rate, you take 6.1 off that. So that ends up at 67.4 if my maths is correct. That's the average of how much the preliminary to the final clearance rate falls. You laughing at me, Michael?
Yeah, sorry, I was just laughing at you if my maths is correct because I'm like, I think it is. It's just they're trying to do it in my head. I'm like, yeah, you know what, Sean? I'll take your word for it.
We'll go for it.
Yeah.
Now, away from the largest two cities, Brisbane recorded a preliminary clearance rate of nearly 73% over the weekend, Adelaide at 88%, Canberra 57%. CoreLogic Research Director Tim Lawless said the relatively high clearance rates have occurred alongside a consistent rise in auction volumes, 2,775 last week. That's the largest number this year and 36% higher than a week ago. However, based on what National Australia Bank and ANZ have said, it just seems a little bit of heat has come out of the price rises.
I love a Monday where we start by talking about property. It's the people's topic, Sean.
It is. There are a few stories today. I was trying to work out what to go with first, but it's just house prices. Everyone loves house price stories.
Oh, absolutely. And And you know what you've done? You've just kind of given fuel for every single workplace conversation this week, because it's a great kind of icebreaker. You can talk about it in the lift at work. You can kind of talk about it in the break room. You can talk about it anywhere, and everyone has an opinion on it. So thank you for your service.
Oh, anytime.
Your service to workplaces all around the country, Sean. Local markets, how did they finish up on Friday?
The S&P ASX 200 closed up 0.4% to 7,644 points, led higher by tech stocks and consumer discretionary companies. Among the large caps, Aristocrat Leisure, Wesfarmers were both pretty good. WiseTech Global, James Hardie, Santos, Fortescue and National Australia Bank jumped more than 1%. Woodside and Telstra both lost ground. The best performer of the top 200, though, was Afterpay owner Block. Its cost-cutting drive and December quarter revenue of $5.8 billion on Wall Street beat analyst expectations. Now, it trades on the local market as well. Its share price was up 17% here. Now, it's the last few days of earnings season. Suncorp and NAB are due to report today. Woodside and Coles tomorrow. There's also monthly inflation data on Wednesday, which will be closely watched. Plenty to keep an eye on, Michael.
Yeah, there certainly is. All right, turning to international markets now, Sean. There's really only one story that's been dominating everything, isn't there?
Yeah, it's all about NVIDIA. Over the weekend, the company pushed through the $2 trillion mark for a while before closing just below that level. Strong December quarter earnings delivered last week and forecasts of even better results going forward has put a rocket under the stock, which has added about $700 billion in value this year. Wow.
As in this year, we're only 2 months into the year.
So I'm just trying to think. I don't have the numbers in front of me, but I don't think the top 10 stocks on the ASX combined is worth as much as what NVIDIA has put on this year alone on Wall Street.
Just the scale of that.
It's just out of control.
That is mind-boggling.
I'll check it properly later on today and confirm it tomorrow, but that's about right. It's actually now the third largest company on Wall Street behind Microsoft and Apple, and it's catching. It's overtaken some of those other tech stocks in the last few days. Wall Street itself closed flat. It's trading close to record levels, of course. That's on the back of growing expectations that there will not be a recession in the world's biggest economy. Otherwise, gold up, oil down, Aussie dollar did nothing as we enter the new week.
All right, good to start the week the way we finished off the last one. We'll be back in a moment with the rest of the day's business news. Sean, aspiring university students whose families earn less than $54,000 a year will be guaranteed a place in a degree if they meet admission benchmarks under changes that the government really hopes will increase the number of people of working age with a higher qualification.
Education Minister Jason Clare yesterday released the Universities Accord with the goal of doubling the number of university places over the next 25 years, reducing the high fees students pay in some subjects, and reforming the HECS loan scheme to ease the financial impact on graduates. The review says high university fees of over $16,000 a year in some fields, including humanities, communications, and other society and culture subjects, such as human movement, should be reduced. Mr. Clare said he wants to turn around entrenched patterns of behaviour that deter students from poorer families and rural and regional areas from going to university. To reduce the risk of dropping out, the reports recommended the creation of more foundation courses to provide students with academic and study skills and boost their literacy and numeracy before they actually embark on a degree. It also says additional funding should come with each of these students to ensure they're given additional support. About time that we had a serious go at improving the opportunity for a lot of people who really would like to go to university but just don't seem to have the opportunity to.
Yeah, that is a really good news story, Sean. Now, you mentioned earlier that we are getting towards, of course, the end of profit season, and most of the big names have reported. Pallets and Logistics Group, Brambles, upped its interim dividend and upgraded full-year forecasts after announcing a 17% jump in net profit for the December half.
It did that on Friday. It continued to lift prices to customers and had more pallets available to transport goods to large retail customers. In fact, I love this statistic, Michael. In North America and Europe, it had an extra 8 million pallets come back into its network. Now, what I love about this Brambles, I've always liked Brambles because there was one year they came out and said, yeah, we've lost like 10 million pallets. You think, what? How can that be? But people deliver stuff on pallets, and the pallets just sit there in docks and shipyards and forever. And of course, they're very expensive things, those pallets.
You know what they remind me of, Sean?
Hmm.
They remind me of shopping trolleys, right? And I would love someone to put this to Coles or Woolies, kind of about their stats on kind of shopping trolleys coming back into their networks. And what kind of a hit that would do to the bottom. I mean, to be fair, actually, limited impact now because they've all got those wheel locks on them as soon as you take them outside of the range. So maybe that's what Brambles should consider.
A wheel lock on a pallet without wheels. I like it.
Okay.
Anyway.
This is why I'm not going to interrupt anymore. Please go on.
Right. A couple of other results on Friday. Sales at Dusk Group have continued to slip as the impact of higher wages and cost of living pressures eat into the candle and diffuser retailers' bottom line. I love that description. Candle and diffuser retailer. Its share price fell 9%. Footwear retailer Accent Group said net profit was down 28% for the 6-month period. It said like-for-like sales across its Hype DC, Athlete's Foot, Hoka and Skechers brands were down slightly. Over the year, it opened 72 new stores. That company, Accent Group, now has 888 stores. Quite amazing. Its share price finished down 5%. And finally, shares in home internet provider Aussie Broadband surged 18% after it beat forecasts for internet subscriber and profit growth. The discount broadband business has now more than quadrupled in value since its October 2020 initial public offer.
Sean, office vacancies are at their highest level in many years, and retail property is also struggling to provide decent returns, but industrial real estate and pubs are going well.
Pubs are doing well. That's exactly right. Very important commercial property because most of us, via our superannuation funds, invest in it. So we need to take some sort of interest. Now, the National Australia Bank Quarterly Australian Commercial Property Survey for the December quarter says office vacancies continue to creep up. They're at their highest level since the survey began, sitting at 10.5% across the country. Capital growth expectations for office property over the next 2 years remains pretty weak, particularly in Victoria and to a lesser extent New South Wales. That's offices. The national retail vacancy is sitting around 7%. The industrial vacancy is just 3.2%. The good news is that confidence in the sector is no longer falling. In fact, it was up a bit last quarter. And if you're trying to get office space, now is a good time because rents have continued to decline, though the pace of decline has slowed.
The former boss of Bingo, Daniel Tartak, has been sentenced to 400 hours of community service and disqualified from running companies for 5 years after he pleaded guilty to price fixing in waste services.
Tartak has also been fined $100,000, and Bingo, which was acquired by Macquarie's asset management division for about $2.3 billion 3 years ago, it was fined $30 million. The Australian Competition and Consumer Commission alleged that Bingo agreed to fix and increase prices for waste services with its Sydney competitor Aussie Skips. Aussie Skips was fined $3.5 million. Its former chief executive, Emmanuel Razakis, was sentenced to an 18-month intensive correctional order, fined $75,000 and given 300 hours of community service. He was also banned from managing companies for 5 years.
Okay, one more before we get to international news. Woodside Energy has sealed a $2.1 billion deal with a giant Japanese LNG importer for the sale of equity in its huge Scarborough LNG venture in Western Australia.
Yeah, what it does is confirm Asia's interest in gas supplies from the region for many decades to come, really. JERA, J-E-R-A, Japan's largest importer of LNG, will take a 15.1% stake in Scarborough and also intends to buy 6 LNG cargoes from Woodside for 10 years starting from 2026. Now, the pair have also agreed to collaborate on business opportunities in clean energy sectors, including ammonia, hydrogen and carbon capture. According to the Financial Review, Woodside CEO Meg O'Neill said the deal, which will reduce Woodside's holding in the Scarborough venture to 74.9%, builds on a long history of collaboration between the owners of JERA. Those two companies are Tokyo Electric and Chubu Electric.
Okay, turning to international news, Warren Buffett has warned Berkshire Hathaway shareholders that his $905 billion conglomerate has virtually, quote, no possibility of eye-popping performance in the years ahead. That seems a bit dire. That's a little bit gloomy, I suppose.
Well, Berkshire Hathaway has had so much success over the years, but the problem now, it just has too much cash and nowhere to park the money. In his annual letter over the weekend, Buffett said there are very few deals that offer the kind of transformative impact past takeovers have had, such as its purchase of insurers Geico and National Indemnity, or its big play in rail in the US, according to the Financial Times. Now, the company spent billions of dollars acquiring a couple of companies like Pilot Flying J, it's a truck stop operator, and an insurance conglomerate, Albany, in recent years. It added to the portfolio, which has already got, banks and Dairy Queen and Berkshire Hathaway Energy. But those outlays put only a small dent in Berkshire's cash pile, which just keeps getting higher and higher. In fact, it's now at $167.6 billion US dollars. It was up $39 billion US dollars over the year, over 2023. What to do with all that money?
That's a quality problem, that is, Sean.
It is a quality problem. Donald
Trump won the Republican presidential primary in South Carolina over the weekend, delivering an almost fatal blow, you'd think, to rival Nikki Haley, because that's her home state.
It is. The former president continues his sweep of the 2024 nominating contests, and the victory solidifies his path to the Republican nomination. He wants to quickly wrap up the primary race as he has other things on his mind, the presidential election, a few legal challenges, stuff like that. Haley, however, has vowed to stay in the race through to Super Tuesday. That's March the 5th. That's when more than a dozen US states hold primaries. But there's little chance that anyone but Donald Trump will be the nominee for the Republican Party for the presidential election later in the year.
Finally, Sean, this story is really quite remarkable. A Texas man made almost $2 million US dollars by illegally trading on his wife's conversations with her BP colleagues, this is according to the US regulator, in its latest case about couples eavesdropping while working from home.
I love this story. So for months, Tyler Loudon bought shares in a company called Travel Centers of America. That's according to the Securities and Exchange Commission. He then sold his shares in February 2023 when BP announced it was going to buy Travel Centers at a 74% premium. So he knew it was going to happen. This is the allegation. Waited for it to happen. The share price took off, and then he sold. Loudon made a $1.76 million profit, according to a report on Bloomberg. His wife was then a BP mergers and acquisitions manager who was working on the deal. She was working about 20 feet away in a home office, and she was totally unaware of what her husband was doing, but he was eavesdropping, clearly. When he ultimately confessed to her, she moved out of the house, later filed for divorce. She reported his trades to BP, who then fired her, despite finding no evidence that she knowingly leaked the deal.
Hang on, what? Hang on. So she still lost her job, even though she moved out. She divorced him. She reported it all to BP. She did nothing wrong. She still got the punt.
She still lost her job.
Oh, that's a bit rough.
I don't know about you and Sean, but Jackie and I, when we're working in the house together, and you do hear conversations from each other, fairly risky to actually take the information and go and trade shares on it.
Yeah, oh, absolutely. I mean, and half the conversations that Sean overhears are conversations with you.
Right.
And
you can make no money out of that.
Absolutely. Because, of course, Sean, we're not an investing podcast.
No. But we do know a lot about the Australian dollar.
That's right. Yeah. Yes, we do. But there's not much hope of making too much money out of that at the moment. All right. Up next is the Fear and Greed Daily Interview. You're speaking with Ben Gilbert from Jarden, Australia.
Sure am. All about the earnings season that we're in the midst of, particularly consumer-facing stocks, and we get a few ideas from Ben about what he particularly likes. Now, Michael, I know you're about to close the show, but I got a very disturbing LinkedIn message over the weekend.
Oh, yeah, go on.
Which, if I can just bring it up on my phone here, I shall read to you, because the gentleman, let's call him Chris, quick idea for the weekend team. As Adam appears to be a keen lover of Excel spreadsheets and keeping score for the weekend edition, I would expect he has an historical analysis of the scores given each week and for each category. This is some impressively rich data and would no doubt provide useful insights for listeners, indeed show Sean and Michael where there are opportunities for improvement. Well, certainly would help Michael out, because he'd be a long way behind. I look forward to hearing about this in future episodes. #big data. Now, Chris, that is fantastic. He also says, needless to say, great podcast. Thank you, Chris. But the idea that you've basically given something that Adam Lang does a hashtag, ouch.
That is worrying, and of course our weekend edition. I mean, for context for anyone who hasn't listened to it, it's very different to the weekday show because it's a competition. It's between you and me, and we are each nominating stories, and it's like high school debating, but with a lot less structure, probably a lot less. I'd
say primary school debating.
Yes, what? So our parents wrote our speeches. It doesn't make any sense. And Adam Lang, our Fear and Greed colleague, is the adjudicator, and he has to decide who wins each category. And so what Chris has done here is suggest that he kind of goes back through his notes from the last kind of few years of doing this, and he keeps very detailed notes on the shows. Put it all into a spreadsheet and then look for trends within the data.
Yeah, I like it. In fact, we might actually be able to give this to Adam and not see him for a week or two. Genius, Chris. Genius.
Look, thank you, Chris, for the suggestion, and we do love hearing from anyone who has any ideas or any feedback or anything. Just get in touch via LinkedIn is always good. Instagram is also good. Fear and Greed Podcast. Find us on there. Send us a message. I'll often pick up those messages, so make sure they are kind towards me. And Sean, we also need to very quickly mention that we have Fear and Greed the week ahead up today.
We do. It's a very big week this week mostly because of the inflation figures that are coming out. There's also retail trade, a few things around, CapEx numbers, capital expenditure figures. So we talked to our resident economist, Stephen Koukoulas, all about that. I particularly like when he explains why he gets so excited and why economists get so excited about the capital expenditure figures, because they really are kind of how you get big jumps in growth often comes through business rather than consumers. Consumers are pretty steady. And so if businesses spend a lot or don't spend a lot, that can actually determine where growth is going. So Stephen outlines why these CapEx numbers talk about that and what they mean.
Yeah, so you've got some good listening. You've got Ben Gilbert from Jarden up first. Then you've got Fear and Greed the week ahead with our resident economist, Stephen Koukoulas, up after that. And then if you've still got some time, perhaps on your commute or maybe on the way home this afternoon, have a listen to the weekend edition from a few days ago. And it might just give you a little bit of an idea about what we've been yakking on about for the last couple of minutes. Thank you very much, Sean.
Thanks, Michael.
It's Monday, the 26th of February, 2024. Make sure you're following the podcast and join us online, as I mentioned, on LinkedIn, Instagram, TikTok, X, and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.